Well, good morning, everybody. Thank you for joining us for another edition of our weekly real estate backstory. My name is Alan Richard. I'm the managing broker here at Max One Realty and Realtor Partners.
My name is Ming Richardson with compliance broker of Maximum One Realty and Realtor Partners. Yeah, this morning I'm not quite there yet. Hopefully everybody stayed safe last night as the storm passed through. There were a lot of power out along with
Like our house.
personal
Yeah,
home.
yeah.
So,
Same kind of thing.
Praying for you guys, and don't. It's a couple of things. Don't open the refrigerator door if you don't have to. That will hopefully insulate whatever you have or freezer.
That's our best advice for the day. Yeah.
Yes,
So
well,
there we go.
stay safe.
All right. Well, we wanted to kind of start off by throwing out a little bit of a scam warning. So FMLS notified a lot of the brokers this past week about there's a new scam going on involving vacant lots. And so we just want to make sure that you guys are staying diligent and looking out for really what's going on. So what's happening is we got these folks are very aggressive. And so and what they're trying to do is they want to offer or they're claiming that they have these vacant lots that they'd like to sell. And they want to sell them for below market value, quick close, cash. And so the whole idea is that you go out, put a lot out there for a ridiculously low price. Right. They go to closing, whole 9 yards. The money gets wired back to them because they're not local, right? And so everything's going to be done by phone or email.
You'll never meet the owners.
No, you won't. They're going to claim that there's going to be some sort of emergency or family emergency. And so that they, the reason they're going to do this is they need like quick cash, that kind of stuff. All their email addresses and phone numbers are either going to be, Gmail, Hotmail, or from another country.
And also make sure you close with a reputable attorney, because the attorney will pull title to ensure that these folks are whoever it is. And honestly, if they do, closing by mail, I'm sorry, I'm drawing a blank this morning, but
if they do a mail away closing,
and they use a fake ID,
but they will try and use them, but they'll be really, really bad photocopies. They're going to be really fuzzy, that kind of stuff, barely legible on there. They don't want any due diligence period. They just want it really fast, quick, and dirty. And if there's any kind of conversation, they become really, really aggressive. And so, please just avoid this, because these folks are out there. We're just trying to make you aware.
As for the folks who haven't been in real estate for a long time, they don't understand that these guys make a living out of that. So there we go. Just make sure you do your due diligence and close with a reputable attorney. And also, just a warning, what I have seen a file where instead of closing attorney is a notary. So notary doesn't mean a thing, y'all. Okay.
All right. Moving on. So Dallas has become the most recent city to clamp down on STRs, short-term rentals, VRBOs, that kind of stuff. And so they're really kind of putting a big push on that. And so they're not the only ones, because even if you go and look at, in the city of Atlanta, the city of Atlanta has a lot of rules and regulations revolving around, short-term rentals, that kind of stuff, what you have to do with them. And so it's not just like Dallas or Atlanta, like a lot of municipalities are putting a lot of rules and regulations out there on short-term rentals. And then we also have quite a few friends that have done the short-term rental game and found out, it's not like all the gurus said. It's not as easy as people say. And so what we're kind of encouraging you is like right now, there's a lot of pressure on the folks that are doing this. And a lot of these folks, we're not seeing property values decline. So a lot of these folks may be very open to listing and selling these properties instead of doing them VRBO. There's a lot of hassle. Sometimes
there's more red tape on the VRBRs and also short-term rentals right now. So And some people, for the one that manage their own property, it becomes a nightmare because this is not their main job.
Yeah.
And so therefore, they might be open to selling the property instead of doing a VRBO or short-term rental.
Well, we've got a couple of listings like that right now, and we know that there's more out there. So we're just trying to say, like right now we need more listings. We'll show you some data on that here in a minute. This is just a place where we see a potential to kind of jump in there and get ahead of the curve. Yeah, you can go into the VRBO sites, find properties that are vacant, and reach out to those sellers or owners, kind of thing. All right, on the good news here, mortgage rates for the third week in a row, mortgage rates have come down. They're not coming down as fast as we really want them to, but they are moving down, and that is a very positive thing for us to see. Zillow had a news survey that came out, and they shared that what is the buyer's biggest design turn-ons, which
Bathroom.
yeah, bathrooms is number one. And like first of all, this is not like earth-shattering news. First is bathrooms, then it's kitchens, right? And so like we know that in the real estate world, bathrooms and kitchens are a really big deal. They sell houses, that kind of stuff. New floors, new appliances, well-maintained yards. And so we're seeing that the front yard is so important because that's your
that's your curb appeal, and also give indication whether or not the neighborhood has an overall pride of ownership.
Yeah. In the backyard, because about 3 out of 4 buyers right now have a pet. And so those are really big deals.
Pandemic, the adoption rate was incredible, and now they're part of the family.
So what are the big design features that folks are really looking for? So number one out there, subway tiles.
It's timeless.
Yep. Moody accent walls are still kind of a thing. Ming loves those. Shiplap.
He won't let me have them.
Yeah, yeah, but shiplap is still good. It's not just Chip and Joanna that does the shiplap's really good. Barn doors are really holding in there. Open shelves in the kitchen. A lot of folks like those, but they don't always know how to decorate with those because they're for looks. They're not for using nearly as much. And then mixing metal finishes in the kitchens and the bathroom. Those are the big ones. Now, other things that's kind of going on. What are in style when it comes to architecture? Ranches and craftsmen are the styles that impress the most. Italianate and modern are the least desired architecture trends. So
the urban, I guess, depending on where you're at, the urban design in Hampton probably will not work.
Yeah. So overall in design, cottage core and maximalism are in. And bohemian and modern again is out. Now, front door colors. This has been like a big debate between Ming and I. Neutral colors are the one that is the most preferred, and bright and bold colors are least preferred.
I know he and I have this.
Yeah, she would like to have the front door with like flashing neon lights, I think.
No.
So
a nice sage or a blue or a red.
Yeah, I know. Yeah, there we go. As far as interior colors, the mid-tone grays and beige and the grayish are the most preferred interior color. Out are the really deep shades,
like Nickelodeon.
Yeah. Now, what's important outdoors? Dining room tables and chairs, a fire pit, and some sort of outdoor structure. If anything you can use to keep the shade off in there. What's out? Fountains and statues, just a little kid peeing into a pond is just not doing it at all. So
I think tasteful fountain, like a water feature with a vase running out of the vase, might be better.
Fountains are out. This is how it is. It's not just peeing kids. So anyway, now our inventory is tight. The number of homes for sale has dropped to the lowest level ever.
Record in May.
Ever. I don't mean, it's down this year. No. The lowest level ever. So just our standing inventory of homes.
This is since 2012.
Is well, I mean, what's on here, but we are at one of our lowest levels of inventory right now. We need more homes to sell.
And while we have the largest millennial in Gen Z that's actually looking for first-time home buyer.
Yeah. And so, Redfin came out and said at the same time, nearly half of the home offers that they have are facing bidding wars. So, all these big companies, they track their data. And so half of them are facing bidding wars at the same time right now. And if you look, overall total new listings of homes, new homes coming on the market are down by a quarter. So you can see that we are at, seriously, historical lows on our new listings. And then we're currently 8% lower than last year, and 8% lower than pretty much any year. Some years when we're half of where we were in previous years on that kind of stuff. And so inventory. Right now, inventory is a bigger challenge for us than interest rates. And that's a hard thing to kind of get your head around, because we've really kind of watched interest rates really drive our market so heavily right now. And now the most important factor is actually having houses. That's a big deal of what we need. At the same time, because inventory is so tight, days on market are going down. And you'd figure that just because we still have a lot of demand, especially this time of year, we're right in the middle of the summer buying season, we just don't have enough homes. And so at the same time, our existing home sales have increased. Okay, it hasn't increased by like massive numbers, but just
not double digit, but enough.
Look, the fact that and this is not property values, this is the volume of sales, and so the volume of sales, you can see that in the United States, in the South, has the largest portion of home sales anyway. And so, but overall, our existing home sales last month are trending up, and that's a really good thing, seeing us starting to finally get ahead of, you can see what our trend line's been, and now we're finally moving up to where we're starting to kind of inch up. And so we need more of that. Now, as far as like why is inventory really tight? Well, as far as if you look at new households and new family formations, and you compare that to the number of homes that we're adding in to our housing stock, well, guess what? We are building less homes than we have for new households and new families formed. And if that's going to be the case, well, then we're going to continue to have inventory shortages. This graph right here really does kind of highlight and showcase exactly why we are where we are. And Ming and I, we get hit up all the time, and with folks who say, I think the market's going to crash. I think property values are going down. And then you look at a graph like this and you see, you know what? We've been making babies and making houses, and making babies and forming households and getting married, and people are, and now we have this huge millennial generation and
Gen Z as well.
And all these folks are moving in, and they want to buy and they want homes. And then you look at what is our actual inventory. Now, the good news is inventory is moving up, but we're building families faster
than we are building homes.
And so when folks say, I think the market's going to crash, I think property values are going to drop, I think this is, and then you see, well, listen, folks, residential real estate is based on supply versus demand. And you can see what's happening with demand, and you can see what's happening with supply. And so, we're in that position where we need more houses. And, that's kind of the bottom line there. And so at the same time, not only do we need more houses, the number of missing homes, the number of homes that we're short, has been increasing year after year after year after year. And so you can see, for the last 6 or 7 years, we're down to we're down, I'm not sure which way we want to put it. We're down about 4.5 million homes in the United States.
And that's 500,000 from last 2019.
Yeah. Yeah. But now, what about Atlanta? Well, Atlanta, we're short 63,000 houses. And on one hand, when you look on this graph, you think, wow, we're not like New York or Los Angeles, 300,000. But you got to remember how many houses 63,000 houses is for the city of, just in the city limits of Atlanta, that's massive, being able to build 63,000 houses. That's what we're short here in our Atlanta area. And so we need more inventory. And so, we keep talking about it, keep pushing on it. Now, what's really, really interesting about this whole dynamic of where we are is, even though we're really tight on inventory, the one thing that we're really kind of, I don't know if excited is the right word, but like pleased to see is that our below median family income homeownership rate is increasing. So like this shows that yes, is it, especially for first time buyers, is it tough out there? Yeah, it is. And if you're making below median family income, is it hard to buy a house? Yes. But guess what? We are increasing that number. Like people understand that wealth in the United States is tied up in homeownership. And for folks that are making below median family income, well, that's a really big deal. I mean, like our buyers are wanting to own homes.
Absolutely.
You can say, well, rents are cheaper right now and it's easier to do this. And, these kind of things and rents have been going down. There's no doubt about that. But still, everybody wants to own a home. Not everybody, but the vast majority. And don't get me wrong, the income needed to purchase a home, and so, this is a report which shows how much money do you need to purchase the average home, the median priced home in all the metros across the United States.
354,000.
Well, the median home price is 354, and that works out to a median monthly payment of $2,600 a month. And so that means that the median price home, the income required is just over 100,000. And so $100,000 is kind of what you need just to buy the average home in the Atlanta metro area. And so if you go back and refer to that graph, anybody making less than 100,000, they're the ones who we're seeing some really nice growth in home ownership, and where their home ownership rate is increasing. That's something that we really need to see more of. And so, we're a lot better than a lot of other municipalities and cities across the United States. The South, yes, we're we can all look back and remember, 5 years ago, 10 years ago, it was only this. But you compare us to New York or Los Angeles or some of these other crazy metros, that kind of stuff. Like we're actually pretty reasonably priced when you look at that. And so, that being said, that's also like a reference point for you of this is what you like when we're looking for buyers to buy, you need to make about $100,000. Your household income needs to be about $100,000 right now. And if not, then they're going to have a harder time maybe, but that doesn't mean that they can't, because remember, those folks who are making under $100,000 really want to buy. And so down payment programs and anything we can do to assist them with finding the right property. Yeah, those kind of things. Yeah. So, because at the same time, home equity has reached we're continuing to see really great home equity. Like those folks who are making under $100,000, they understand that home equity is really, that's a really big deal. And so we can say, what, mortgage rates are higher, and that's true. But when you really look at like what as a country, where's our mortgage debt? Well, our mortgage debt is actually pretty level, pretty flat. But when you compare that to our equity, it is still a really sound decision to buy a home. So, all right. I want to change gears and I want to talk about something, but I'm not trying to
be political again.
Oh no, nothing political, political. But it's kind of a dirty word sometimes, because sometimes folks don't like when I talk about Open Door, and I'm not selling Open Door. I don't have any stock in Open Door, and I'm not pushing Open Door. However, right now, Open Door is looking for the same thing that a lot of other folks are looking for: inventory. And so for a limited time, Open Door is offering a 3% commission on any seller transactions. They started a new program. And so I know it's not right for all of our clients, but if you submit,
but for some clients, it is.
It is. And right now, at least for a short time, you can submit your property before it goes into the MLS, into Open Door, and they'll buy it and give you a 3% commission at the moment. Like, that's not a bad deal.
Not a bad deal, but please make sure you read their fine print
as
far as what their addendums and conditions are, because that can matter on what your seller needs are.
Well, but it really does come down to the seller. It's about consumer choice.
Correct.
Because sometimes a lot of these iBuyers, they can close in 5-7 days kind of thing. If you have a seller that somebody needs, you have a seller that really needs to sell and they're really just got to get out of Dodge, maybe that is the right program for them. All right. Now we talked about this earlier, and that is single family rents are going down. And so, the ones that are having the hardest time are low price rentals, but like that's not what's being built. So much of our multifamily construction has been focused on the high to middle tier pricing, and those inventory levels are rising, and therefore those pricing is really going down. Now, single family rentals not going down as much, but we see that it's a different market than the multifamily market. All in all, the rental rates are coming back much more in line with norms and reasonable kind of thing. And so, we do expect this to kind of start leveling off. But that being said, single family rentals are going to continue to be elevated. And even though it may look like it's much cheaper to rent, the average renter's net worth is around $6,300.
Yep.
Versus an average homeowner's worth, which is somewhere between $250,000 and $300,000. So there's a really big deal. Now, our builders, in contrast here, our builders have moved into positive territory. Anything over 50 is considered a really positive thing for our builders. So suddenly our builders are feeling very, very bullish, very good about what's going on in the market. And now, and we're even starting to see the builders that are building, the builders, at least in our area here, man, it's townhome city.
It is townhome city.
They are building a ton of townhomes, but guess what? That's the closest thing that they have that they can sell. That folk, especially, well, not just investors, but to the first-time buyers and younger buyers.
Actually, there are scams. I'm sorry, within a townhome community where a builder or sell to a large investment group and basically scan them out of the property because the property is not being maintained.
Okay.
Yeah, there were some, remember?
Well, there were, but that's totally off topic from where we're at here right now.
I'm just saying that there are some that's going on right now.
But the whole point here is that there's more builders, and the builders are very confident, and that's turning over into housing starts. Our housing starts are surging to the highest it's been for a little over a year, and that's a really good sign for us, because when you look at all the challenges that we've had previously, as far as or currently, as far as we don't have enough inventory, we need more homes to sell. We've got this growing families and population groups that need more housing. Seeing that the builders are starting to like right now, the housing starts, which means they're not completed. They're just starting them. They're getting permits, that kind of stuff. They're starting it right now. We need this inventory. So for if you're not a new construction agent, if you're not well versed, you need to get well versed right now, because somewhere around a third of all our inventory right now, because inventory is so low, a third of our inventory is new construction. And if you're not well versed, if you're not comfortable in dealing with new construction, you're going to hurt yourself or hurt your buyers. I mean, that's just kind of the bottom line.
Yep.
All right. We've got the Tom Ferry Success Summit that's coming out on August 22nd, 23rd, and 24th. It's going to be in all the partners' offices. We really put this in your calendar and come in and join us. We make it just like if you went to the event in Dallas, Texas. They like when they get up and go, woo, we do the same kind of thing. And we have vendors that join us for this. And so it's a really, really good event. You'll gain some great nuggets. It will help you grow your business. So please plan on joining us on the 23rd, 24th, 23rd, 24th, 22nd. Wow, just babbling randomly here. As far as training this week, 9:30, Dana is going to be doing, on Tuesday, on the 27th at 9:30, Dana is going to be teaching virtually licensed law for agents and brokers. And then on Thursday,
actually, Martin's going to be teaching code of ethics in our Carrollton County.
In our Carrollton office. So hope you guys having a good week. If we can be of any kind of service, please call, text, smoke signals. We answer it all. Hope you guys have a wonderful week.
Happy Monday, y'all.
Thanks.
Take care.